Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in.
Okay, happy Monday everybody. I hope you had a restful weekend and I wish you all a productive week ahead. I'm filming today's episode in Auckland International Airport. My apologies in advance for the background noise. I hope it is not too distracting. This is the only time I could get a recording in to ensure the episode is released on Monday. I'll be in the air as it's released. I'll be back to normal recordings from tomorrow. Let's begin with a space we've been following very closely for well over a year now on the channel, local government fiscal pressure. Over the weekend, Chinese financial media outlet Caixin reports that more than half of the 31 provincial-level regions on the Chinese mainland lagged behind their annual fiscal revenue growth targets in the first 7 months of the year, quote, sending warning signs for local governments' fiscal health, end quote. According to Caixin calculations based on Beijing's own government data, in the period, 16 provincial-level regions failed to keep up with their annual targets for general public budget revenue growth. Only 6 surpassed their targets, while data for the other 9 regions were incomplete. Caixin writes that, judging by 2023 data, provincial-level regions that lag behind their annual revenue growth targets in the first 7 months are unlikely to close the gap in the remaining months of the year to meet their annual targets. Quote, this year's data underline the financial plight of local governments, whose revenue have been stunted by implementing 3 years of COVID-19 control measures, as well as the slowdown in economic growth, which has affected tax revenue. The data don't include local authorities' revenue from land sales, which used to be the major funding source for government coffers, but has declined sharply since China's property market collapsed in 2021. End quote. This is an area we have been following especially closely. Meanwhile, and this is an incredible story, last week economist and deputy director of the Institute of International Strategy at the Party School of the Central Committee of the Party, Zhou Tianyong, wrote a short article titled Urgently Prohibit and Stop Local Governments from Supplementing Fiscal Revenue by Detaining Private Entrepreneurs and Releasing Them for Money. It is a shocking article, especially coming from such a senior voice. It's essentially saying that local governments are kidnapping people and forcing them to pay a ransom. Indeed, it was so provocative that the article was soon censored on the Chinese internet after publication. And remember, this isn't some random economist or blogger. This is a senior leader in the party school of the Central Committee of the party. Here is some of what Zhou wrote, and it's very important that we give him the space to unpack this. Quote, as a scholar, I urgently call for the immediate halt and prohibition of the practice by local party committees and governments at all levels of using local disciplinary inspection committees to detain private entrepreneurs and release them for money as a means of obtaining local fiscal revenue. This must be prevented from spreading and becoming a national economic disaster. Recently, local governments at all levels are facing widespread financial difficulties, and local party committees have assigned tasks to supplement local fiscal revenue to various party government and judicial institutions. The pressure of balancing income and expenditure and repaying debts is understandable. However, if local disciplinary inspection committees at all levels detain entrepreneurs who have allegedly bribed, are suspected of bribery, or even those who have been reported based on rumors, and then release them for money to obtain local fiscal revenue, it will certainly lead to another national economic disaster if it spreads. The large-scale campaign to demolish illegal structures of enterprises of all sizes, along with the 3-year pandemic lockdown, has already devastated businesses, reduced employment, decreased income, and shrunk consumption, leaving the national economy completely exhausted. I have observed that to complete their assigned fiscal tasks, local disciplinary inspection committees usually detain key local enterprises. Once an entrepreneur is detained, normally operating businesses face forced debt collection from banks and other creditors. Stock prices of listed companies fall, orders from acquiring companies decrease, suppliers become afraid to supply goods, and management and employees become unstable. Many businesses fail as a result. Even for those that don't fail, after the entrepreneur is released, they begin to consider moving their remaining assets abroad. Even those with the best attitudes become apathetic. Local disciplinary inspection committees are misusing their power. Detaining entrepreneurs is an easy way to make money, and the amounts are substantial. No one dares to stop it. If this spreads, key private enterprises across the country will collapse, stop operations, close down, give up, or relocate. Then, no matter how many policies the National Development and Reform Commission introduces to promote the development of private enterprises, how much deficit the Ministry of Finance runs, or how much currency the People's Bank releases, and how much it reduces interest rates, it won't be of much use in reviving the national economy. End quote. We can see why this shocking report from such a senior economist was quickly censored online. Next up, yesterday, Sunday, Taiwan's Defense Ministry announced that it remains on high alert after detecting multiple missile launches deep within mainland China, just days after Beijing reported a successful test of an intercontinental ballistic missile. Starting at 6:50 a.m. local time, Taiwan observed, quote, multiple waves of missiles firing, end quote, by China's rocket force and military in the regions of Inner Mongolia, Gansu, Qinghai, and Xinjiang, all of which are more than 2,000 kilometers, 1,200 miles from Taiwan. Taiwan's forces are maintaining heightened vigilance, closely tracking the situation and enhancing air defense readiness, the ministry added. China's rocket force manages China's nuclear and conventional missile arsenal. On Thursday, Taiwan raised concerns over increased Chinese military movements and live fire drills near the island, accusing China of erratic policies. Beijing defended its military's actions as lawful, signaling that these exercises would continue. As we just said, last week China announced the successful launch of an intercontinental ballistic missile into the Pacific, the first such launch in over 40 years. In August 2022, during military drills following a visit by then US House Speaker Nancy Pelosi to Taipei, China fired missiles into waters near Taiwan. It has been reported that Taiwan operates advanced radar systems on its central mountain range, enabling it to monitor activities deep inside of China. Next up, we have one more development to cover, but first, today's episode contains a sponsored feature. Sponsored features are restricted to just a few a month to ensure that the channel is financially sustainable, while primarily still supported by subscriber support. If you'd like to know how I work with sponsors, this is in the description below. We are certainly living in interesting times. The situation in the East and South China Seas continues to intensify. Washington and Beijing move closer to a new Cold War, and of course, Moscow's war in Ukraine continues to rage on. For the first time in 4 years, not only are central banks and governments buying gold, but the public is as well. As we have seen this year, both China's households and central banks have turned to buying gold. According to the World Gold Council, a quarter of central banks intend to follow suit amid increasing pessimism towards the future role of the US dollar. Bank of America just went on record to forecast gold will hit $3,000 US. 3 weeks after we profiled a gold company that is up over 20% in 20 trading days, now there is a second major sponsor that is directly involved with gold, copper and silver, the Holy Trinity. Looking at the investment world today, US stocks are trading at all-time highs, more expensive than at any other time in history. The last 2 times that US stocks were this overvalued, gold surged by 2,400 and 700% respectively. This time it's even more dramatic, as you can see. Even gold stocks are breaking into 52-week highs. But today's video sponsor on the NASDAQ is trading down 40% from its IPO price and 62% below its all-time high. That is a rare opportunity, and that is exactly why US Gold Mining Inc. could be a top pick for October 2024. US Gold Mining Inc. has a market cap of $75 million with $8 million in cash. Their flagship asset is in the state of Alaska, where the governor, Mr. Mike Dunleavy, is working on massive road and infrastructure projects to make mining campsites more accessible. The Whistler project has indicated resources of 3 million gold equivalent ounces and inferred resources of 6.5 million gold equivalent ounces. It is one of the largest underdeveloped gold, copper, silver projects in the world. Here is Mike Dunleavy visiting with Tim Smith, the CEO of US Gold Mining at the Whistler project. Before Tim Smith, on the left, was CEO of US Gold Mining. He worked for Newmont, the world's largest gold producer, a multi-billion-dollar company. Before that, he was instrumental in selling a gold project, not too different from Whistler, to Gold Corp for 520 million Canadian dollars. That project was smaller than Whistler, which is currently valued at only $65 million, and the price of gold was $1,300 back then. Today, it's more than double. He certainly is the right man for the job. The company is also currently drilling. The upside potential is clear if the management is able to unlock the value of this resource portfolio. Like many resource companies, this is a moderate risk, high reward speculative opportunity for investors looking for that kind of play in their portfolio, and it is worth looking into. We remember that all investment involves risk. This sponsored feature is not individual investment advice. Always seek professional advice and do your own due diligence before making any investment decision. A big thank you to US Gold Mining for sponsoring this episode of China Update. Okay, we now return to regular coverage. Over the weekend, we did a deep dive into the roles of nationalism, history, and racial bigotry in Japan-Chinese tensions. For today, I wanted to shift to look at the geopolitical contours of the relationship through two recent reports published in US outlet The Diplomat. The two pieces provide a nice primer to understanding the basic dynamics of the geopolitical tensions between the world's second and third largest economies. The first is from Aparna Divya, a PhD candidate at the School of International Relations and Public Administration at Fudan University in Shanghai. Let's quote some of the piece. "One can change friends, but one cannot change neighbors." This quote from a former Indian Prime Minister applies to China and Japan as well. Given their geographical proximity, both countries have a pressing need to find ways to cooperate and coexist. In late July, Chinese Finance Minister Wang Yi met with his Japanese counterpart, Kamikawa Yoko, on the sidelines of the ASEAN Foreign Ministers Conference in Laos, ahead of the East Asia Summit and the security-focused ASEAN Regional Forum. Wang reiterated that China-Japan relations are at a critical stage. The minister went on to talk about contentious issues like the detention of Japanese nationals in China, limits on semiconductor exports, and China's import ban on Japanese seafood. The bilateral relationship has long been plagued by wartime crimes. But amid recent strategic maneuvering, diplomacy between these two Asian superpowers has become more complicated. China and Japan are currently embroiled in a number of conflicts, including the territorial dispute over the Senkaku Diaoyu Islands, a constant source of tension. Their relationship is also strained by economic challenges, such as China's prohibitions on importing Japanese seafood after the release of nuclear wastewater from Fukushima, and Japan's export limits on semiconductors. Geopolitical alignments further heighten tensions. China's worries about regional security dynamics are compounded by Japan's close links to the United States. Today, trade and technology have become a point of ongoing tension between China and Japan. For example, Japan has announced export restrictions on 23 types of semiconductor manufacturing equipment, aligning with US policy. Although Japan did not explicitly target China, this move, which requires manufacturers to obtain export clearances for every region, is anticipated to impact Chinese companies' access to cutting-edge chip-making technologies. Despite these challenges, China and Japan remain economically intertwined. China stands as Japan's largest trading partner, while Japan plays a crucial role as a major provider of technology and investment to China. In fact, China ranks as Japan's third largest investment destination, with direct investments reaching over 1 trillion yen, equivalent to $9.2 billion in 2022, marking a 4.4 increase from 2021. Both countries can enjoy economic incentives if they settle their differences well in order to prevent adverse effects. The primary challenge to their stability is striking a balance between security concerns and the economic advantages. Japan comes under the security umbrella of the United States. The US-Japan Mutual Security Treaty, signed in 1951, ensures US protection to Japan in the event of an attack, enabling Japan to concentrate on its economic growth while depending on US military support. Recently, the security partnership has grown even stronger. China is concerned about the changing security dynamics between the US and Japan, and this has an impact on China-Japan ties. China and Japan's bilateral relationship is at a critical juncture, as economic interdependence exists with historical grievances, territorial issues, and strategic difficulties. While tensions over security and trade persist, the enduring proximity and intertwined economies of the two nations require ongoing cooperation and dialogue. The next article is by Cheng Kun-ma, a professor at the Graduate Institute of China Military Affairs Studies at the National Defense University in the Republic of China, that is, Taiwan. We now quote selected excerpts from this piece directly. On September 18th, the Liaoning aircraft carrier of China's People's Liberation Army Navy passed through the waters between Japan's Yonaguni Island and the Iriomote Island during significant attention from various governments and media outlets. This maneuver represents the latest step in China's recent series of provocations against Japan, following incidents involving PLA aircraft entering Japanese airspace and spy ships intruding into Japan's territorial waters. While the strategic value of the Liaoning itself and the political implications of this voyage are undoubtedly important, three significant military trends related to the Yonaguni Island have long been overlooked by observers. These trends raise several policy implications, not only for Japan, but also for the US and Taiwan. First, Chinese submarines and aircraft carrier groups may aim to further evade the US and Japanese underwater surveillance networks along the First Island chain in order to access the Western Pacific. Second, the new operational trends of the People's Liberation Army Navy pose a greater attritional threat to the Republic of China Navy, that is the Taiwanese Navy. Third, in contrast to the situation faced by the Republic of China Navy, Japan's primary naval base in the southwestern islands is located in Naha, Okinawa, which is farther from the Yonaguni Channel than the PLA's base in Sandoao, Fujian. This means that if Japan Maritime Self-Defense Force were to continuously respond to the increasing pressure of the People's Liberation Army Navy vessels in the Yonaguni Channel, the challenges of Japanese ship deployment and the cost of logistical support could be considerably higher than China's. While global attention is focused on Chinese aircraft carriers operating closer to Japan, it is essential to closely monitor the significant changes in broader PLAN activities around Japan's southwestern islands and eastern Taiwan. At the same time, the navies of Taiwan and Japan may need to establish a more extensive cooperation mechanism to increase their presence in the Yonaguni Channel without conflict, thereby responding more effectively to China's naval activities in this area and exerting pressure on the PLAN as it transits through these waters. Here ends the direct quotes and today's episode of China Update. Thank you very much for watching. Once again, my apologies for the audio situation in the airport, but hopefully it wasn't too distracting. Have a great Monday, and I will see you back for regular episodes tomorrow.